Hey everyone, this is Michael Blanc with themichaelblanc.com. In this video, I want to talk about closing costs and acquisition costs and due diligence costs. All the stuff that happens before closing. A lot of investors don't really think about that until it's too late and they have to realize, oh my gosh, they need much more money than they thought. So in this video, we're going to look at the syndicated deal analyzer and look at its rules of thumb to help you estimate what those closing costs are, as well as the due diligence costs as well. All right, let's get started. In this video, we want to use the syndicated deal analyzer to see what the estimated closing costs would be for an apartment building. So we'll go back to a 44 unit here. We've been working on this one for a little while, and we've kind of added the financials to the syndicated deal analyzer. We structured the deal where we pay the investors a preferred rate of return, and then 55% of leftover profits we're paying ourselves at closing, as well as when we sell. And we've fine-tuned the P&L to decrease vacancies from 27 to 5% over 3 years. All right, so we're currently at a 13.5% average annual return for the investors. So the things we've kind of ignored a little bit up here is we have the estimated closing costs here, and that really comes from the acquisition costs tab. So there's a few here with asterisks, and the ones with asterisks are estimated costs that will arise during due diligence. In other words, these are the costs that you need to pay before you even close. The other ones are estimated closing costs that will be paid at closing, and that will come out of the proceeds, out of the investor money. But if you look at this here, for example, to look at some of these expenses, you have legal fees to set up an entity and a private placement memorandum, and this varies widely by your attorney. I've seen this number be as high as $25,000. All right. Then we have property inspection, where you're inspecting 44 units at $250 a pop. You may have a lead paint inspection. This is more important in some jurisdictions than others. Obviously, you can override all these things. These are all rules of thumb, but they need to be overwritten as you talk to your lenders as well as your title company. So here's some of the costs from the lenders. For a building this size, this number is going to be larger. It may be a phase one, so this might be a little bit like $4,000. The appraisal is going to be probably more like $5,000 as well. All right, and some of the prep fees here. The origination fee normally goes to the broker on the deal. And then we have closing costs, and this varies obviously by jurisdiction, so you need to check with your title company to see what those are, and then override this with your local rule of thumb. But it's quite a bit. And this then estimates the total closing costs, which then is added to your sheet here, together with the repair costs and the down payment, calculates what your total initial investment will be. So anyways, that's a quick rule of thumb on estimating the due diligence cost as well as the acquisition costs. Hey, thanks for listening. Have a great day.